Hi, I'm Katie Mangelli, the CEO and founder of Monarch CPA. I wanted to come to you today to share some information about 2020 tax updates. All of us lived through 2020 through the pandemic that was COVID-19, or I should say is COVID-19, being very hopeful with our vaccines here, which also created multiple tax law changes. And as we head into tax preparation season, I just want to take a minute to highlight some of the biggest changes that may impact you, your friends, your family, that you may have questions on. You may wonder how they apply to your situation. So, my goal today is to really go through the highlights, not every nitty gritty detail in these tax law changes. I'm really hitting on the points that impact most of our clients and that we anticipate seeing the most. If you have any questions, note that in the files section, the slides are going to be uploaded so you can download PowerPoint slides I created with a little bit more details, numbers, specifics than I may share in our time here today. Also, as always, please feel free to drop a comment or send me an email if you have questions about how this may impact your specific tax situation. Again, just giving you an outline, overview. Just want you to be aware in case you hear these things or you see some of these documents. So you go, oh, I should probably talk to Katie about that. Or I wonder if that applies to me. I'm going to check in with Katie about that. So, with all that being said, we're going to just dive right in. So, the first tax law that came out was in early 2020. It was called the Secure Act. The most important feature of that act is that it increased the age for the required minimum distribution. So in general, when you get to 70 and a half years old, regardless of your financial situation, if you're still working, if you're maybe have a pension or some other form of financial support, if you have money invested in an IRA, you're required to take a required minimum distribution. There's a lot of details about age and amount and how it's calculated. What you need to know today is that that age increased from 70 and a half to 72. It also allows you to just completely skip your required minimum distribution this year, should it not be needed. So if you are in that age group, if you are wondering if it applies to you, again, you just check in with me. After the Secure Act, we had the CARES Act. I believe I'm thinking back in time now to when we really all went into lockdown. I believe that act was end of March 2020. It's the one there was a lot of press coverage. We all heard a lot about it. But one of the things that that act did was that it allowed some ways to borrow or take distribution from your retirement funds. A lot of people, their employer may be shut down or closed down. It left people in financial hardship. If you suffered a financial hardship, there were ways to take distributions from your retirement account. Now, keep in mind, these are not tax-free distributions. The main benefit was to allow you, if you are under the age of 59 and a half, which is considered our typical retirement age with retirement accounts, it allowed you to take that early distribution without the 10% penalty. So if you did withdraw funds from your retirement account and you were impacted financially because of COVID-19, it would be important to discuss that with me, because when you get that 1099-R, I'm assuming it's just going to say distribution code 1, which is a early distribution. So in order for us to determine if penalties would or wouldn't apply or how this flows on your tax return, we just need to know, have a little bit more details about what was going on in your family situation during the pandemic. So just make a little mental note of that if you did take an early distribution. If you're, for example, receiving a pension or a regular military retirement, I'm not referring to that. I'm referring to a withdrawal from your IRA or your 401k, kind of a lump sum payout. There was also some ways to take loans on your 401k and extending repayment periods. So again, if you took a loan from a 401k to get through this time period, just make sure that you bring that up with me when you're submitting your tax documents. Another provision that came up that I want to highlight is for those of you that may not itemize your deductions. Now, 2 years ago, when we had the 2018 tax law change, the standard deduction increased substantially. So many of you that may be nearing paying off your house and don't have a significant amount of itemized deductions may have been taking the standard deduction the last few tax seasons. And if that applies to you, but you're still very charitable and tend to make charitable donations, you've unfortunately been missing out on that deduction. But during the pandemic with the CARES Act, there was what they call an above the line deduction added, meaning you can take a deduction for charitable contributions made, even if you're not itemizing. So regardless of your tax situation, if you made charitable contributions during 2020, please make sure that you send us those receipts, maybe a spreadsheet of all of your charitable deductions, so we can determine the maximum amount of charity deduction that you are eligible for in your tax situation. So switching topics, we're going to move on over to education, student loans, and 529 plans. So also in 2020, there were some expansions made to the use of 529 funds. Typically, they were for tuition, room and board, standard college education costs. But during 2020, they expanded it for fees, books, supplies, computers, even if you have to pay fees, maybe for internships or apprenticeships. You can also withdraw if you have money in a 529 and you have existing student loans. You could take $10,000 out of your 529 and use it to pay down student loan debt. So if you have a 529, if you incurred those types of educational costs in 2020, again, let's make sure that we cover that topic so that none of that distribution is considered taxable. Stimulus payments. So this was a hot topic and there is a lot. There are a ton of details on this topic. I will not be going through every detail on this topic. So if you did or didn't receive a stimulus, if you're wondering how it wasn't the right amount, how do we fix this? This is a conversation that we absolutely need to have. So first off, I don't have the number in front of me. I was actually looking at my notes, but I do not have it. There is an income phase out. Going from my memory, which is not always perfect, I believe the income phase out for married filing joint was 150. Single married filing separate is 75. What does that mean? It means if you made more than that, you can pause and wait for me to get to the next topic. You are not participating in the stimulus program. If, however, you made below those amounts, then you would either get the full stimulus or a partial stimulus. So if you're a single person, that was $1,200. If you're married, it's $2,400. And then there was, I believe, $600, I believe, again, memory here, for children. This is where it gets tricky. Phase outs, age of children, who is eligible, parents who maybe split custody, because here's the bottom line. The stimulus is a 2020 tax credit. So that means that your stimulus is calculated based on who is on your 2020 tax return. So the benefit though is they used either your 2019 or your 2018, whatever had been processed by the IRS at the time those checks started rolling out last April or May. So if your 2019 was on extension, then it was based on 2018. What does that mean? They recognize there are some potential issues. So the important thing to note is if your stimulus was based on married filing joint and 2 children, and in 2020 you are single and claiming no children, no worries. They will not be They will not be collecting any overpayment that was advanced to you. You are fine. That's how the law was written. So no worries, no stress. If, however, you filed an extension in 2019, so the stimulus was calculated on your 2018, and you've since had 2 children, in 2020, when we do your taxes, you will get the additional payment with your tax refund. So all you need to know is who's in my household in 2020, who's on my return, because we will calculate the rest and make sure that it is reconciled. Now, we mentioned this when we sent out your engagement letter last week. So if you didn't get that email, make sure to let me know, because they have gone out. But you received 2 things when you got the stimulus payment back in April, May, or whatever month yours came, because they were on a rolling and continuous basis. So first off, it was either direct deposited or you got a physical check. And so the first thing I need is, how much did you get? Now, keep in mind with those income phase outs, if your income is, 70, a certain level, it might be a prorated portion of the payment. So you may not have gotten exactly 1,200 or exactly 2,400. You may have gotten kind of a weird amount. So you're going to need to go into, if you don't have a copy of the physical check, no worries. You can go into your bank and look for the deposit and the image of when you deposited it and tell me that amount. If you don't know, there's also a where's my stimulus payment tool on the IRS website that may provide you with more information that can support you in that. But the second thing you got was a letter from then President Trump that actually stated the amount of your stimulus. I know some people did not keep that letter. We did post on social media to try to keep that letter. It came separate from the check. It came from a separate department. It came from the White House. It came about a week to a month after you got your payment. So if you have that letter, that's what I need. Now, some of you, because of the tax law that was signed at the end of December, have gotten a second stimulus payment, and some of you haven't. So again, there is a tool on the IRS to tell you if you are getting the second stimulus payment. It'll say what date that they intend to mail that out or process your payment. If you've already received it, we need to include that amount in your return. If it says one is pending, but you haven't gotten it, we really need to hold off e-filing until we have that amount. If there are any errors in the amount, what will happen is that a notice could be generated by the IRS and they will correct your return, assuming it was a mathematical error. So for example, if we tell you you're getting a refund of $1,000, but it turns out the stimulus calculation, we didn't have the appropriate amounts, that amount could be much smaller. So we just need to make sure we have the most accurate information to submit your return. So again, you can get that through the IRS tool, which we'll post in the description here, but you can also get that from your bank records or on the letter that they included with your check. So just keep that in mind, because there's a lot going on with the stimulus calculations, but it all gets reconciled on the 2020 return that we'll be filing now. So any questions on that, just feel free to comment or send me an email. For those of you that are a business owner and you either receive 1099s from services that you provide, or have to provide 1099s for subcontractors that you work with in your own business, there was a big change to the 1099 forms in 2020. If you've been in the 1099 realm for a while, then you're familiar with the 1099 miscellaneous. And box 7 is generally where it said like non-employee compensation in box 7. Of course, that form still exists for rents and other boxes that were on the form. But the IRS decided that it would be simpler if we created a form called 1099 NEC, which I assume stands for non-employee compensation. So all that's important to note is that if you were distributing 1099s to contractors, during January when they needed to be prepared, hopefully you sent them out on the new form, not the old form. If you receive them, just note it will look different. So if you have any questions or concerns, to let us know. And side note, I saw an image in a Facebook group the other day where somebody received a 1099, and because the person preparing it wasn't aware of the new forms, they had used whiteout and written non-employee income in box one, and it had been filed with the IRS in that way. So apparently there is some confusion about the changes. So if you're not sure how to prepare or receive one that seems to have been completed in an interesting way, just let me know so that we can figure out how to get that fixed and how to handle that for you. In the slides, I do want to draw your attention. I think it is slide 15. The IRS has been asking for a number of years about virtual currency. So in another video that I did, I touched on this change and the emphasis that the IRS is putting on virtual currency. So this year they're expanding the question. I think in the past it said, maybe did you buy or sell virtual currency? Now it's asking, let me just read it. Do you have any interest in virtual currency? And so basically they're just casting a broader net to understand taxpayers' relationship and involvement with virtual currency. So again, I don't know all the virtual currency lingo, but Bitcoin is obviously the most famous, but there are many, many, many other variations and names that virtual currency can be called. It can be used as almost like you could use a Cash App. It can be used in gaming. There are a lot of platforms where you can buy, sell the currency itself, as well as you can use it as currency and buy and sell goods and services. So if you or a member of your household are participating in the virtual currency marketplace, it's really important to communicate that. There's nothing at this time that we need to be disclosing unless if you are buying and selling, it's like stocks and bonds. There are taxable consequences to buying and selling virtual currency. So first off, make sure that you're communicating that. But if you're just buying it and holding it, if you're buying it and then using it as currency to pay for goods and services, it's really important that you communicate that when you send in your tax documents. That has been a box or a question on our engagement letter states that, but please don't skip past it. It's not just about trading currency. It's about just even owning it or using it in any other format. So there should be many more people that are answering yes to that question this year. If you have any questions or concerns on whether or not it impacts you, that is definitely one to reach out and schedule a time for us to talk. So the final thing that I want to go over is just that the IRS has made a change to late filing fees. So the filing fee for late returns was, and this is just for 1040s, for late returns was about $215. It's now about $435. Or 100% of the tax due on the return, which could be substantial. So why do I point this out? So again, in our engagement letter, you will notice that we list out due dates for all the returns due between now and April 15th. So that's business entity returns as well as individual returns. And below that list of dates, it indicates when we need to have your information in order to file by that due date or extend your return. So important note here, these late filing fees do not apply to extended returns. However, if you do not communicate with us by the due date, we don't know that you need or want an extension. And if we do not file an extension and we don't have your information, and so your return is not filed by that due date, then you would face these penalties. So just a reminder, make sure you communicate with us about where you are in collecting your information, when we can expect to see it from you. If you need an extension, we can support you in that way. We just need to make sure that we have heard from you, that we have the information to calculate an extension. An extension is automatic in most cases if you don't owe any tax. But if you have transactions, even if you're just under withheld on your W-2, you have significant capital gain or investment income, or maybe you sold a property this year or had substantial business income, and your estimates do not cover the tax fully and would owe tax due, then your extension needs to include a payment so that you don't incur late payment penalties, which are different but similar to the late filing penalties. So really, it's just about communication. Keep us in the loop. We can support you with your timing, but we just need to know when we'll see your information so we can block out an appropriate amount of time to work on your return, to communicate with you, to go through any questions that may come up. So that's a lot of information. Again, it was a very high level because these tax law changes affected so many areas of the tax process. But I just wanted to share these tidbits, which I feel will impact the widest range of our clients and that we anticipate seeing the most in this 2020 tax season. Again, you can email me, Katie@monarchcpa.com, and we can schedule a few minutes to chat about how any of these changes impact you, what's coming up for your tax situation, and make sure that you feel supported with getting your taxes done for 2020. Also, feel free to drop a comment if there's a more general question, and I'll be responding to them right here. Thanks.